Okay, as we're sitting here waiting for everybody to show up, I'm going to share a little bit of what I'm looking at. Gold, we've been waiting for gold to basically do a turnaround and get started on its upward journey, if you will. And so that's what we're expecting, about a 10% run once it gets turned around. So make sure I'm logged in on the right. I think I'm logged in on the right webinar. There we go. Hey, guys. Yeah, please introduce yourself as you get into the room so I know who's here. And also just wanted to do a double check, make sure you can both see and hear the audio. Hey, Eric. Can see but not hear. Well, it was working fine earlier. How about anybody else? Test, test, test. Test, test, test. Okay, I can see and hear. Thank you. I can hear. Yes, yes. Okay, awesome. Thank you, guys. Okay, let's go ahead and get going with the presentation. Some of you are premium members saw that we did put out some alerts, some buy alerts on gold a little bit earlier today. I'll be covering that in the next hour with the premium members for the final hour of the day. And but let's take a look at, let's get started at the beginning. There we go. Okay, good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to Making Money Trading Stocks and ETFs. As I am trying out this new applications through Webinar Jam, part of it I like, part of it I don't like. One, it is very easy to use. It gives me a little bit more flexibility. You get to see a picture of me down here in the lower screen, which is down here somewhere. And not that that's a big deal, but hey, you get to see some movement other than just the slides going on. Do me a couple of, if you could do me a favor. One, let me know what you think about this particular venue for doing the webinars. And if you know of any other type of venues that I can be checking out, that I can have my son check out regarding how to do better presentations. I would like to get something where everybody, like I think you guys can see each other's comments and actually can respond back to each other. But as the same situation I have, I can't see who's in the room. And for me, that's a real drawback because one, well, I think it's important to know who's in the room with you. So like I said, then secondly, with this format, if you are having any technical difficulties, sometimes you have to log off and log back in. That's just a quirk in the system. Again, one of those things that I'm not real pleased about, but we'll be following that as we continue along. So let's get going quickly. Michael Bishop is not with us today, and I figured out why Michael wasn't with us is because when switching to the new format, I forgot to send him the invite to log on. So we'll get Michael going next week. I want to remind that everybody that all materials presented are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance, no indication of our promise of future performance. A little bit about me. Some of you who are new to the room, just fill in some of the information about some of the things I've done. I do trade full-time for a living now. and also help coach and teach people how to trade stocks and ETFs. We've done pretty good over the years that we've been trading the system, and so we're always looking though for ways we can improve, and we work on that on a regular basis. And since this is the last Friday in the month of June, therefore the last Friday in the quarter, the second quarter, and the halfway point in the year, I'll be doing a lot of work this weekend to kind of, okay, where do we need to refine? What did we do well in the first half of the year? What can we do better going into the second half? I think that some of the new things that are coming on board you'll really like. Did anybody get a chance to watch the video I put together last night, the bonus training video on using the TSI for where you can basically use the TSI, a couple of new indicators with that to utilize that for strategy 3. Cover that a little bit more in the final hour. And so Troy asked, are there call-in options with Webinar Jam besides just the computer? Yeah, I think you can call in and link in on your smartphone and or your tablet. So remember, most trading errors come from a lack of patience and a compulsion to do something, even when nothing really needs to be done. I have been sitting there fighting that compulsion all week long as I've been waiting for a setup in gold. We are finally getting that setup in gold. Now it looks like it's triggering to the long side. Now we have to see how do we get into it. The objective of today's webinar is very simple. One, timely, actionable intel review at the end of each week. Market review. Market somewhat right now is it depends on the day. With all the tweets that have been going on, the potential tariff saber rattling, all that kind of stuff, the market is mixed up. It's searching for an identity. Hasn't found it yet. Stocks, ETF performance, and then bonus trades. We are looking for a potential new bonus trades in JNUG and or one of the goals, and I'll cover that today in this session. Here's where we're sitting. If we close out where exactly we're at, we will have hit 20% for the first half of the year. Dow's down a little bit for the year. S&P slightly up. NASDAQ Composite and Russell leading the way, leading the charge into throughout 2018 so far. Here's how we're doing on each one of the strategies. Wouldn't you know it, as soon as I get my portfolio really built in place with it totally filled up, we get the little bit of a correction in June and get wham. But the great thing about it is, though, is the system was very good in getting us out with stop losses at the 5% level, and so there was never a time our drawdown was way less than 5% on any of that. So that's one of the things that one way to measure our successes, and so I'm pleased with that. So far, early warning alerts. What we'll be looking at going into next year as we finish up early alerts. This basically is going to change somewhat with a new name, and also we're going to be following a slightly different format where we will be, yes, providing the early alerts, but also we're going to be going both ways. In other words, when the market switches to more negative, we want to be able to take advantage of those opportunities also. And so you'll see a lot more trading opportunities in the, and we're still looking for a new name for it, index reversal pivots, something like that, but that's what will be introduced. We will continue on with early warning alerts through the end of 2018, but have that new system. We'll launch that new system, introduce it to people probably in the October timeframe, so everybody will be up to date in how that works. Our go, no go table has been very popular, very successful. Here was the go, no go we put out on the 24th, which was last Sunday. And you can see the one green TSI setup that we had was in GDX. And guess what? We're getting that GDX fulfillment right now as we speak. And And this is the, I mean, we're actually catching this as it turns. And that's really huge when you get in early on a turn. Doesn't mean that we're not going to, maybe go down just a little bit more, but I'll show you two trades that I'm looking at doing to cover the gold seasonality into the end of the year. Here's those stop outs I was telling you about. We had some good profits though in SPU, VNOM, and then got whacked on BABA, NBD, and YY. I will be doing a reshuffle of our watch list this weekend. Looking for anything that should be replacing these. Now, of course, BABA, Tesla will stay on the list. And then we're also going to be, well, I'll talk to the people at 9 o'clock, at the 12 o'clock hour about that. GLD, I'm looking to do a credit spread that's going to expire in October of this year. Leap strategy. Actually, we have now leaps going, or we have strategy open positions in Tesla and the spiders, nothing open in BABA right now. Where we have our objective of doing strategy 3, target $500 to $1,000 per week. Right now, I'm averaging about 313. I'm anticipating that to increase going into the end of the year also. That's what we're working towards. So here's gold, and that's what I'm going to be focusing on. I'm going to focus on 4 different charts. I will cover the indexes and a little bit about gold before we close today. But we are right there. We are in the sweet spot of the gold seasonality. And as I've covered before, that this seasonality can trigger anywhere between a plus or minus 3 to 4 weeks on either side of the July timeframe. So somewhere in, that's a little bit exaggerated, but sometime between, first part of June, last part of August, where you anticipate to get a bid with the gold seasonality. What does it tend to do? The last several years, I've actually gone back about 30 years worth of data, but just to go back over recent in July, what kind of a move did gold get? Tends to be on an average of about 10 to 12 to 14, 10 to 14%. That's the move from the low spot in the June, July timeframe. So about a 10 to 14% move. And knowing that, it can be help us to be set up to do some really good things with some of the let's see here. Yeah, with either GLD, Nugget, or JNUG. Crude and seasonality for crude. It too, crude got a really nice bid this past week, and it just, after the OPEC meeting last Friday of last week, it launched almost straight up. And we're looking for a place where we can get into crude, because we still anticipate about another up to $20 more per barrel to the upside, and we just need a slight pause, so and a little bit of, I won't say weakness, but a little bit of a pullback, so we can get in and trade that through the October timeframe. That's the anticipation. So with that, let's look at a couple of charts. I want to set you up for a couple of potential trades. Okay, here is, well, let's go over here first and look at SPX. SPX, there we go. There we go. Okay, yeah, as we can see, SPX is basically, here's where its high was February of this. Wait a second here. Wait a second. SPX, enter. Sometimes because of so I think that is correct. Yep, that's about right. And so what I'm looking at SPX, and let me go also, and I want to swap out over here to the daily weekly. So here's the weekly, basically nice little pullback. However, we're pulling back after making a lower low on a lower high on a weekly chart, slightly lower, pulled right back to the moving averages, getting a little bit of a bounce. But look at TSI on a weekly chart has in fact turned down, without even getting up into the way oversold condition. So that's a sign of potential weakness. However, we have cross signals on SPX on the daily chart. TSI just crossed up to the upside as it bounces off the 100-day moving average, pops back up to the 820 combo where it has now found resistance. And it looks to be selling off. Now, if the low of this candle is busted, that would be an indicative that we may be going to slide on further down. You can throw in a trend line about there, and so that's the new trend line. As long as that trend line stays in place, you can actually take trades to the downside, especially if they close back below the 50. What we're anticipating and watching for, we've got about an hour and 45 minutes before the close, and this is last day of the quarter, last day of the month. Will the money managers or the fund managers sell off into the close? Normally, a lot of times they do, and so we'd anticipate a dump into the close. Maybe, we'll see how severe it's going to be. We'll see how severe it's going to be. So that's what's going on with SPX. Index, the NASDAQ, similar type situation. Daily, we have broken down below the 820. The 820 has done a downside cross. Now you've got a price action moved all the way back up into that level of resistance. TSI has ticked up. However, that resistance held at the 71.03 level. And so we would anticipate, is it going to push down from there? Again, where might it go? Right back down to the 50 or lower. If it pushes lower than that, then we will put ourselves into a new downward trending channel. So NDX, let's see how much it does in fact sell off for the rest of the day. Okay. Russell, same basic thing. Came all the way down, bounced off the 50, bounced back up. Now the 820 crossing, that is a sign of weakness, and is if price action get up to that, look for that to be the place where it's going to turn around. TSI is trying to turn back up, but it just hasn't done so yet. Weekly wise, you've got a significant evening star with a shooting star last week and a large bearish engulfing this week. And so that would foretell a reversal and a move down. I want to highlight a couple of things here. Here are the TSI oversold, overbought, oversold indicators. This is the TSI indicator I provided to everybody a couple of weeks ago who wanted it, who uses TOS charts. An arrow pops in when you get the TSI crossover if it is above whatever level you have defined to be your levels of being overbought or oversold. With this indicator here, you can adjust that. As you see, I have adjusted mine to a plus 42 and a negative 42. Negative 45 plus 45 would be very conservative. You would get fewer signals. Plus 40 and a negative 40 would be a little bit more aggressive, and so I kind of took a middle of the road, not wanting to be too aggressive nor too conservative, and so I set it at 42. When those trigger,
that tends to say, especially on the high side, that tends to say, okay, I've gone as high as I'm going to high, or this I have put in a temporary new high. Now, does it work every time? No. As you can see here, earlier in June, we got the rollover here, what looked like to correspond here. However, did not fulfill to the downside. Get the rollover here, it did fulfill to the downside. Got the rollover here with a bearish engulfing. It did fulfill to the downside, but it was a short, shallow pullback. This pullback here, a little less short and a little bit less shallow. Let's see how far we've actually dropped. As of yesterday, the low was about 4.52. So just a healthy, nice little move. But having those up here, you can be just looking, and say, oh, I got a downside. And if you're doing things like selling premium against a system, selling option premium, or selling spreads, or even buying spreads, that can give you a really good indication of, okay, hey, I've got my trigger to the downside. That should be an indication that the tendency, the high is in. And we'll see how long it lasts. As you can see, the high that was put in here on this on a weekly chart back here on the 22nd of January, it stayed in place all the way until right here, where it was broken out of on the 14th of May. So that high there stayed in place across that period. So kind of a nice little addition to the the indicators we've been using. And if you use Thinkorswim and would like to get a copy of that, if you just send me an email, and you know what my email is, dww@activetrendtrading.com. There we go. Okay, hey, moving right along, I want to cover the last two things I want to cover real quick are JNUG. And let's see. Okay, JNUG pushing back up. We've still got a downtrend line. Nice pop up today. Probably the, and as you can see, one of the things, TSI tick up and cross. So that's a positive buy signal on JNUG. I am not going to buy JNUG if it's up here against this resistance line, this downtrending line. I will much prefer to buy JNUG at about 13, let's say 1350, between 1360 and, no, let's say about there, 1350. That's where I would prefer buying JNUG. So on the weekly chart, as you can see, my stop, if I bought it there, would be at the low of the week, which is, 1291. But if we need to know, how much of a, well, that equates to about 4%, so 4.37. So I could go with a 5% stop if I basically move, pick it up at 1350. Another thing I could do, since this is the high day, if I crash through the low of the high day, I could basically get out of my position there, and then buy it back if I needed to later on. But that's one option. What type of a run did it go on? Well, last July, as you can see here, and I'll just go over back here, JNUG ran from these lows here up to that high there, about 75%. So yes, I want to be playing with that. The other one, on JLD, it's got filled on something. I just don't know what it is. Okay, JLD. GLD, excuse me. GLD, we are getting a, again, we're looking at this. Here's last July. It ran about $13, about 11%. And I think this was the December run last time. If we roll back before that, just be aware. Here's the July preview. No, that's December. Where's this?
Yeah, okay. The July run, the year previous, actually got started at the end of May. And so right from there to there, again, 13%. So when it does that seasonal run in the June, July timeframe, or even in the May, June, July timeframe, it usually runs about 13%. So if we estimate, say, even if it's just 10%, okay, 10% takes us to 129.59. And so I'm playing this, and how long does it normally take? Well, it usually takes about, well, from this high to this high, this one closed out September, first week in September. So if we anticipated that, first week in September would be, I want to say, about there. So what I do, and I'm going to show this to you on the, there we go. A couple of different ways to trade this. One, let's go over here and look at trading the GLD. So I want to go out to the October timeframe, because normally by the end of October, this move in gold is over with. And I could go a couple of ways. I could go with an at the money or slight, an at the money around a 0.5 delta. And the delta that I'm talking about is right here. Okay, there's delta. So somewhere around a 0.5 to a 0.4, I'd be good with that. 0.4s, you can get a little bit, less. Where are we expected it to go? Well, we're expected it to go to 29 by September, the mid part of September. So we can trade this one of two ways. One, I can just go ahead and buy the 120s. And if we buy the 120s now at set that, buy the 120s now at it's between 241 and 245. If I bought 5 of them, that would be about $700. No, I'm sorry. That would be about $1,200. And then I can just let it sit. If price action goes to where I think it's going to go, let's go out here to September, midsection of September, and let's say it goes from where it's at. Let's say it does go to 29. Well, that's $10. Let's just say $10 from where it's at right now. Well, that option will be worth about $8.85. If I didn't want to bear all the risk, what I can also do is I could basically buy a debit spread. Now it would limit, with a situation like this, it would limit my upside. In other words, I would make about $6 and some odd change on per contract. If, however, if I basically bought and sold, I could buy this contract, and this would be a vertical. I could go out to, how high do I want to go? Well, I'd want to go, let's say 28. So I could buy that right now for $1.84. And what would be the anticipated per contract? Well, the max profit I could make is $616 per contract. My max loss is already defined and out there at $184. And so this contract would be expected to come in over the next, between now and the in October, but we'd expecting that move up to 129. And if I increase this up to, here's what I want to do. I basically want to go in with somewhere between 5 and 10. You can see $920 invested and potential profit $380. So a very, very, I think, a really good risk-reward ratio. And it's just betting on this is what tends to happen on a yearly basis, a run of about 10%. So that's the way you could basically trade it, giving you 2 different ways to trade the potential seasonality move in gold. And so with that, I'm going to basically say I'm out of here for this week and look forward to seeing you again next week. And let me go back over here to if I can get there from here. There's what I'm looking for. And anyway, so okay, keep the day growing. Trade wisely, trade profitably. This is Dennis signing off. We'll be back in at the top of the hour with the final hour for premium members. So let 2018 be a year of breakthrough and restoration for you. Happy 4th of July weekend. Next week will be a little bit of a crazy week since the middle of the week is the 4th of July. So there may be a lot of volatility next week and very little volume. And so till next week, hey, God bless America. Have a great 4th of July. God bless you. Aloha and mahalo for joining us today. See you guys.